All right, so here's a quick example of closing entries. So we created our financial statement. Obviously, this isn't a fancy financial statement, just showing you how we calculate net income. You know, we could add our title in and everything here. But once we create this income statement, and the income statement's created, now we're going to close the revenue and the expense accounts. Remember, revenue and expense accounts are temporary. And so we need to close them at the end of the period. And so remember, revenues have, I'm going to bold this, I'm going to change the color here for you. Revenues have what type of balance? Yes, they have credit balances. Expenses have debit balances. Okay? Revenues have credit balances, and I'll fix it there for you, and expenses have debit balances. So when we want to set those revenue accounts to zero, we need to debit the revenue account, and we close it. Remember, when we close these temporary accounts, we close them to retained earnings. Retained earnings holds the accumulation of all net income the company's ever made. And remember, we take dividends out of that. So it's all net income that has been retained by the company. So when we close that revenue account, the revenue has a credit balance. So we need to debit the revenue. So we're going to find the revenue accounts. We debit the revenue accounts. And whatever that total comes out to, in this case, there's only one type of revenue account. We close it to retained earnings. So this is a journal entry. Journal entry number 1. So there's only 2 journal entries in closing. Close the revenue, close the expenses. So now we're going to close the expenses. Remember, expenses have debit balances. So in order to get them to zero, we need to credit all the expense balances from the ledger, and then retained earnings holds that balance. Just remember here that these are journal entries, much like our regular journal entries, our adjusting entries, our closing entries. These are going to get posted to the ledger, and it's going to, when we do that, it's going to set all of our revenue and expense accounts as to zero. Retained earnings is going to hold. In this case, I'm looking at it. Looks like we have a net income here of $22,855. So retained earnings is going to go up $22,855. So that is it. I mean, that is literally what you're doing on closing entry. You're closing the revenue accounts, and then you close the expense accounts, and that's it. So don't make that harder than what it seems. So now when we start the new accounting period, the only accounts that are going to have balances are the balance sheet accounts. The assets, the liabilities, and the owner equity accounts, and retained earnings is going to hold that cumulative net income from all prior periods to that point in time. So there you have it. You have a video on journalizing. You have a video on adjustments. You have a video on closing. The financial statements, we've worked on plenty. You have had plenty of practice with that. Keep practicing the problems that you have. And level 2 students, you're good to go. You're ready to knock this test out of the park. Level 1, make sure you also study the periodic, perpetual, gross, net inventory method problems. So make sure you understand those journal entries there. All right, best of luck to you studying, and I will see you on test day.